There was a point back, and it may have been a year ago, 2 years ago, you and Wills and I were, I think, in your office, and we were talking about funds and fund management. And you said something that was very interesting, thought-provoking. And we left and we said, that's a really interesting way Anil is looking at things, or an interesting question he raised. And you had said something to the effect, there's a difference between being a good investor and being a good fund manager. And I'd love to hear you kind of unpack that a little bit, if you would.
Sure. Yeah. Well, I think that the two things are very distinct and different. I think, I mean, I consider myself to be a professional investor, and so, to me, very simply, there's the business of investing, and then there's the business of, running the business of investing. And, I think that they're complementary, but they require, sort of, different skill sets, they're different tools to be used to do those jobs effectively. And, and so in my experience, sometimes, people who get into the business of investing, at the early stages discover like that it's difficult to manage and to run a fund. And so what do I mean by that? I mean that, investing, I mean, take TIA, you guys are great at, your process involves, sourcing good companies, it involves diligencing, the businesses and, making sure you have all the right things in place, the product market fit, the right management team, et cetera, et cetera. And, when you have that, you make an investment, you're making the buy, if you will. When the investment has been made, it really becomes, in my opinion, incumbent upon the, investor or the fund manager, the GP, to also understand how to do, a variety of things around that investment so that that investment is efficiently deployed and properly monetized, right? And so, what I think is that as a fund manager, life is not as simple as you make an investment, you put it away, and you hope that, what you underwrote is what you got, right? I mean, as a fund manager, your business is to generate a return on capital in an efficient manner for your limited partners. And, and to me as an LP, the only thing that's more important than return on capital is return of capital, right? And so as a fund manager, I think you're always in a position where you need to be, not just spending your time figuring out how to invest in the right companies and the right teams, but also to some degree, you're building the exits to the cathedral. You're trying to think of, when am I going to be able to exit and how am I going to be able to exit? You're thinking about things like, capital costs. How do I, minimize the hassle factor for limited partners, and at the same time maximize my return? Well, there are things like subscription lines, which I know, now are very common. Some years ago they weren't as common, but they're very helpful in kind of smoothing out capital calls and at the same time, many of these subscription lines, because they're backed by the full faith and guarantee of the LPs, they're very cost effective. It's cheap money. And so it's a way to not only kind of smooth out your cash flows, but also, ultimately to, improve IRRs, because investors get to hold their capital longer and you start the clock later, right? And so that's a good thing, for, I think, a fund manager, to be doing. I think it's also very important for fund managers, along the way while investments are harvesting and, teams are doing their magic, improving operations, implementing strategies and so forth, but along the way as value is created, I am a big believer of de-risking investments. And I don't just say that about the private equity space. I say that about, the venture space, the growth equity space, and even the credit space. When there are opportunities to take a return and de-risk, I believe that, again, as a fund manager, that's an important thing to do. Because at the end of the day, as a fund manager, you're in the business of raising funds. And so what you really have to do is not just be a good buyer, but a good seller. You have to be a timely seller. You have to, know how to call capital, how to do partial exits, how to, wrestle portfolio companies to the mat. There are, situations, I'm in where, where GPs, have come up with, all kinds of structural approaches to helping to improve outcomes for their limited partners by, by setting up secondary sales, or sometimes even, creating like GP-led continuation funds so that they can exit maybe say older vintage investments, but keep, some of the better, performing or investments that just need more time. And so to me, there's a whole panoply of things that revolve around, the efficient deployment and, return of capital. It can happen in an iterative fashion. Doesn't have to happen in one transaction, in 1 year. It can happen over a period of a number of years. And frankly, that's one of the things I like about you guys, because I know from personal experience that you have some positions that you love, that you sold out of partially or maybe even totally in some of the earlier funds. And, it's not an easy thing to do when you really like an investment, but I am always acutely focused on, I think I've said before to you, not just, IRR, but DPI, and how soon are you getting money back to your investors? Because the sooner you do it, depending on your fund documents, the sooner you can recycle that capital and redeploy that capital. And, investors love funds where, they can, recycle their money and, re-up their bets without having to reach into their pockets again. And so these are the kind of things that, I think are sort of, really important outside of just the, kind of the sourcing, the diligence, and then the execution of the investment transaction that, make it so that, when you're coming around to limited partners for the next fund and the fund after that, and they benchmark you, against, funds that, have been doing this for a long time, that you don't stand out as having, a lower DPI or a good MOIC, but not as good an IRR, because, time matters as well as, as the ultimate return. That's a long answer to your question, but
It's Anil, it may be more than a minute, but it was chock full of nutrition and super insightful and super helpful. Can't thank you enough for giving us a little peek into how you view the difference between being a great investor and a great fund manager. Thank you very, very much.
my pleasure, Andy, always.